So good morning, everyone. Welcome to this fine Monday morning. I hope you've all had a fantastic weekend. And as you get to step into this week, I will bring you the weekly market briefings with me. My name is Geoffrey, educator and market analyst at Scope Markets Kenya. So as we get to start these weekly briefings, we're going to look at last week's market review, the major data releases and impacts of and market reactions. Upcoming week, what we're looking forward for this week, the key events to watch out for into this week, and we also have the trading implications. So stay tuned and welcome on board. So last week we had the Canadian CPI, and it also had various impacts on the Canadian dollar. The Canadian dollar and pairs that are paired with the Canadian dollar. So the Canada's CPI increased by 0.1% month over month, slightly below expectations. So however, this uptick was enough to raise the annual inflation rate to 1.9%, up from 1.7% recorded in the previous 2 months. The core inflation remains elevated. So the more critical core measures, closely monitored by the Bank of Canada remained persistently high. Then the CPI median rose slightly to 3.1%. The CPI trim held steady at 3%. So the breadth of inflationary pressures showed no meaningful improvement, indicating underlying price stickiness. So with core inflation levels well above the Bank of Canada's 2% target, this report does not support a rate cut at the upcoming July 30th policy meeting. So on 30th July, we will be having the Bank of Canada policy meeting, again, and discussing monetary policies and inflation. So with the kind of data we've gotten for inflation for the Canadian dollar, chances are very high we might not see a potential rate cut, but we cannot forecast that until the actual rate comes and we get the data. Then we can be able to know how to react. How to react from the data given. So for now, we just have to wait and be patient until July 30th. Then we do have the United States inflation, labor, and the trade policy effects. Last week, we also had the CPI for the dollar, which measures the rate of inflation. So the US CPI rose by 0.3% in June, bringing the annual inflation rate to 2.7%, the highest since February and above the Federal Reserve's 2% target. So the core CPI, which excludes food and energy, it rose 0.2% month on month. then it was a positive 2.9% year on year, which was slightly below the expected 0.3% month-on-month increase. So it got a 0.2% month-on-month increase, but the expected was 0.3% increase. So the figures suggest that tariff impacts from the President Donald Trump administration are filtering through consumer prices, though not so dramatically. Then you also had the PPI, which is the Producer Price Index. The Producer Price Index flat in June, 0.0% versus the forecasted 0.2%. So the core PPI also remained unchanged. The final demand for goods was a positive 0.3%, and final demand for services was a negative 0.1%. So these PPI results indicate moderate inflationary pressures at the wholesale level, contributing only marginally to consumer level inflation. Then we had the labor market snapshot. So the unemployment rate rose to 4.3%. The participation rate rose to 67.1%. Employment level rose to 14.62 million. Employment to population ratio steady at 64.2%. And the employment rate rose to 6%. The monthly hours worked dropped as well. Full-time employment dropped by 38,200, and part-time employment rose by 40,200. Then this data paints a picture of a slightly softening labor market, with full-time job losses offset by part-time gains and a rise in underemployment. So we also had the jobless claims. So initial claims in the week ending July 12th, we had 221,000. We had 221,000. So this was a drop. This was a drop of 7,000 from the previous week. Then we had a 4-week moving average, so a drop to 229,500. Insured unemployment rate steady at 1.3%. Insured unemployment rose to 1.956 million. So despite some volatility, labor market strength remains intact though trending cautiously. Okay, so despite some volatility, labor market strength remains intact though trending cautiously. Then we had the UK CPI, so showing the strength or the weakness of the pound. So this is it helps showing the inflation rate of the pound. So the UK's annual inflation rate accelerated to 3.6% in June, beating the forecast of 3.4% and up from the 3.4% in May. So they were expecting that it's going to remain unchanged, but there was an increase to 3.6%. So the core inflation rises. The core CPI is 3.7% year on year, up from 3.5% in May. So the UK's annual inflation rate accelerated to 3.6% in June, beating the forecast of 3.4% and up from 3.4% in May. So the core inflation rises. So the core CPI 3.7% year on year, up from 3.5% in May. So this sharp rise reflects broad-based price pressures across sectors, including housing, transportation, and recreation. So the report led to a 0.2% intraday gain in the British pound, rising to 1.3406 against the US dollar. Then we do have the market volatility and Fed uncertainty. So last week we saw President Donald Trump mention about a likelihood of there were reports from the White House that there was a research warned that any attempt by President Donald Trump to fire the Fed chairman Jerome Powell will be significantly negative for markets. However, President Donald Trump said that he was highly unlikely to do so, which caused a lot of uncertainty in the markets. So such a scenario could result in legal battles, possibly reaching the US Supreme Court, shaking investor confidence, and weakening central bank independence, which is a key pillar of monetary stability. So we saw an instant impact on the markets, especially on the dollar pairs. We saw a very significant push on the dollar index, a very significant push on all pairs that have the US dollar, from the pound dollar, the euro dollar, the USD Canadian dollar. Then you have the USD Swiss franc as well. So all these pairs were immediately affected. So we are yet to see the stance which President Donald Trump will take with the Fed Chair Jerome Powell. However, as per last week, he mentioned that he's not likely to fire him. So let's observe and see how that goes and how it will also affect the markets, starting from the dollar and all the pairs that are, all the currency pairs that are paired to the US dollar. Then last week we also had corporate earnings reports released for the various companies. We do have Pepsi, we had JP Morgan, Goldman Sachs, Bank of America, among others. So I will take you through that, starting off with PepsiCo. So the EPS adjusted was $2.12 versus the expected $2.03. Then the revenue was $22.73 billion versus the expected $22.27 billion. So organic revenue growth was a positive of 2.1%. The global volume was down 1.5% for food and flat beverages. Then the net income was down to $1.26 billion from $3.08 billion year on year. So the market reaction, the stock rose in pre-market despite weaker despite despite weaker demand. Pepsi beat earnings and revenue expectations, although volume softness is a concern for future growth. Then you have Goldman Sachs. So Goldman Sachs, the EPS was 10.91. The EPS was $10.91 versus the expected 9.353 dollars. So the revenue was $14.58 billion versus the expected $13.47 billion. The profit was $3.72 billion. That is a positive of 22% year on year. So that is quite some good positive earnings on Goldman Sachs. Then equities trading revenue was $4.3 billion. That is a positive of 36% year on year. So Goldman benefited significantly from market volatility induced by tariff uncertainties, reinforcing its edge in trading intensive operations. Then we have the Bank of America. The Bank of America had an EPS of $0.89 versus $0.86, the expected $0.86. Then the revenue was $26.61 billion versus the expected $26.72 billion. So the profit was $7.12 billion, which is a positive of 3% year on year. The net interest income was $14.82 billion, which missed by $70 million. Notable is that the only major bank that Bank of America. Okay, notable is that the Bank of America is the only major bank to miss revenue expectations this quarter, despite a solid earnings beat. So we have a JP Morgan Chase. So the EPS for JP Morgan Chase was $5.24 versus the expected $4.48. The revenue was $45.68 billion versus the expected $44.06 billion. The earnings dropped by 17% year on year due to the prior year's Visa's gain. Then the fixed income and investment banking, we have outperformed expectations. So even after adjusting for tax benefits and the one-off gains, JP Morgan still delivered a strong quarter with core operations showing resilience and efficiency. Now, as we come into this trading week, we have a number of events to watch out for this trading week. Starting off with today, we have the BOJ bank holiday. So today we are starting off with the Japan bank holiday. Then on Wednesday is quite a busy day for the euro. Not on Wednesday, on Thursday, sorry. So on Wednesday, we do have the Reserve Bank of Australia Governor Bullock speaking. Then on Thursday is a very busy day for the euro, starting with the French flash services PMIs. Then we will be having the monetary policy statement by the European Central Bank. We are yet to hear their stance on inflation. We are yet to hear their stance on their rates. So are they likely to hold or have a rate cut or a rate hike? So that is something to closely observe on Thursday, July 24th, as we will be having them releasing their monetary policy statement. Then right after that, we will be having the European Central Bank press conference. So that is also a very key conference to listen to, as it will help us to know their tone in inflation. Will they be hawkish? Will they be dovish? So that is something to closely observe and see. during that time, and also observe all the euro pairs. I mean, all the closely observe the euro and all the euro pairs, because this will also greatly affect the euro and all the euro pairs during that time. Then on the same day, we also will be having the unemployment claims for the dollar. And also we'll be having the flash services PMIs for the dollar as well. So Thursday is a very busy day for a pair like the euro dollar. Then lastly, we end the week on Friday with the retail sales month on month for the Great British Pound. So looking forward to see how these events turn out for the various currencies this week. This Friday we'll be having a Forex Summit event here at our offices in Westlands at Westside Towers on 4th floor, starting from 2 p.m. to 6 p.m. We will be having an event for trading where you have get to learn, network with other traders, and also get to be able to trade and gain insights. So looking forward to seeing you there. I'm inviting you all. Come one, come all. Invite a friend, invite your family, invite your colleague, invite anyone that you feel will be able to benefit from this event. Looking forward to seeing you. Looking forward to seeing you there.
This month's FX Summit is different. It's coming home, right here in Nairobi at the Scope Markets office on 25th July from 2 p.m. to 6 p.m.
We'll tackle information, belief, skill, and 6 more must-know confidence factors so you trade smarter and not harder.
Learn hands-on MT5 strategies, hear success stories from local traders, and network with peers and mentors.
Reserve your seat today by clicking the link below, create an account, verify, and make a $50 deposit. Then I'll see you there.